What's up, YouTube? This is Atticus from The Complete Trade, and today we're going to take a look at Bitcoin. So, an article that just came out today from DL News, which is a cryptocurrency and DeFi news source, stated that Hong Kong is very interested in launching Bitcoin ETFs following the footsteps of the United States. We did talk about this in previous Coinbase episodes, where once BlackRock stepped into crypto, other financial institutions would follow in BlackRock's footsteps. Abel Xiao, I apologize if I butcher these Asian names. Abel Xiao, the sales director of BitGo, did state that an Asian Bitcoin ETF could be the solution for investors on the continent to get convenient and affordable access to the asset class. Xiao also stated, in my previous role in private banking, conversations with clients about their portfolios often shifted at the end to digital assets and alternative investments, he said. The response from most banks was that clients had to find their own solutions if they wanted to take their interests further. Furthermore, officials from South Korea, Thailand, and Singapore are warning brokerages from promoting U.S. Bitcoin ETFs as officials review the safety of such investments. Gotta be honest here, that's a bunch of bullshit. Bitcoin ETFs, especially from BlackRock and Fidelity, are extremely safe. BlackRock and Fidelity are top 1-2 in the asset management industry. The BlackRock Bitcoin ETF has JP Morgan and Chase as one of their authorized participants, so I highly doubt there are any safety concerns surrounding the BlackRock Bitcoin ETF. I'm sure it's just Asian countries not wanting to support the United States and wanting to promote their own local Bitcoin ETFs. That being said, I know China is having a severe economic crisis at the moment, from property prices declining to decreased consumer confidence, to GDP missing analyst estimates, to the Chinese stock market dropping 6% yesterday. I'm quite confident in saying that the Bitcoin ETF should be the last thing on Hong Kong's mind at the moment. Okay, moving into the charts, in the last Bitcoin episode, we discussed the pre-halving Bitcoin correction, where every time Bitcoin tagged the blue 0.75 Fibonacci trendline before the Bitcoin halving, Bitcoin has always had a correction to the downside. To summarize the corrections, in 2012, Bitcoin crashed 49%. In 2016, Bitcoin crashed 38%. And in 2019, Bitcoin crashed 71%. So far, Bitcoin has dropped only 15%. Now, we also discussed in the last Bitcoin episode how this pre-halving correction resembled 2016, where Bitcoin went slightly above the blue 0.75 Fibonacci trendline before crashing. So the price targets this week remain the same from the last Bitcoin episode, even though our long-term price target still remains at $175,000. The reason why we sold in the last Bitcoin episode is that we are simply not comfortable with seeing our cryptocurrency holdings crash 30 to 50%. Shifting gears to the Bitcoin against S&P 500 valuation, we haven't talked about this chart in a while. If you recall from the Bitcoin episodes back in October and November, we were bullish on this chart, and this chart helped us predict Bitcoin's rally into the $40,000 region. Fast forward to today, bearish signals are printing, with 2 gravestone dojis being printed on the 2-week time frame. As you can see in the screenshot above, gravestone dojis occur after an uptrend. Once the gravestone doji gets printed, a prolonged downtrend occurs. And on top of all that, these 2 gravestone dojis are printing right at the red 61.8% Fibonacci retracement resistance level. Moving into some indicators, starting with the daily RSI indicator, we've been talking about the bearish divergence Bitcoin has been accumulating for weeks now. As Bitcoin was making a series of higher highs, culminating with the launch of the Bitcoin ETF, the RSI indicator was printing a series of lower highs. And now we are seeing the bearish divergence play out. Just like the previous CleanSpark and Coinbase episodes, one bottoming signal we are looking for is the daily RSI to hit the oversold region. So we want to see a daily RSI reading under 30. The current RSI reading is at 41. Before we continue, I do want to point out in the short term, there could be a bounce on the horizon. Crypto stocks are down over 50%. Bitcoin is forming some bullish divergence on the 4-hour time frame, so a bounce could definitely be on the cards. Additionally, Bitcoin is at the bottom of the sideways trading range, but I am personally staying on the sidelines for now. Shifting gears to the MACD indicator, as Bitcoin was making higher highs, you can see the MACD histogram, which measures momentum, making lower high after lower high. Now, even though the MACD looks pretty awful on a lot of crypto stocks, the MACD histogram doesn't look as bad on Bitcoin. That being said, we haven't seen this much bearish momentum on the MACD histogram since the bear market's bottom in 2022. Taking a look at the momentum and money flow indicator, just a quick recap: the red and green waves measure money flow, and blue waves measure momentum. Similar to the RSI and MACD, you can see that with the Bitcoin ETF launch, both momentum and money flow was leaving Bitcoin. Taking a look at the TD sequential indicator, Bitcoin is on the left and Coinbase is on the right. We can see that Bitcoin has printed a 9-count sell signal on the weekly time frame with a bearish shooting star pattern. The last 9-count sell signal we covered on this channel was Coinbase stock just a few weeks ago, and Coinbase stock has dropped over 30% so far. Taking a look at Tether dominance, just a quick recap: when Tether dominance goes up, Bitcoin goes down, and when Tether dominance goes down, Bitcoin goes up. For the past few weeks, we've been saying how Tether dominance is due for some upside because Tether dominance is trading inside our white trend-based fib extension support area. On top of that, Tether dominance did tag our white demand trend line as well as the critical support level at 5.24% to a T. Tether dominance is also printing a bullish dragonfly doji on the weekly time frame. As shown in the screenshot above, bullish dragonfly dojis occur after a downtrend, and what usually comes after is a prolonged uptrend. As stated for a few weeks now, we do favor upside on Tether dominance, which means that we do anticipate a correction is coming to the cryptocurrency markets. Okay, let's close things off with some regression. Just a quick recap on this indicator: the red region represents Bitcoin's overvaluation, the green region represents Bitcoin's undervaluation, and the blue line represents Bitcoin's fair value. Bitcoin's fair value this week is at $37,125.30. As you can see, Bitcoin's fair value has served as a previous liquidity landmark, so definitely expect a bounce if Bitcoin tags its fair value. So with Bitcoin dropping almost $10,000, I know all the bears are going to come out and say Bitcoin is going to 10K. And quite frankly, that's bullshit. As you can see, the undervalued region of the regression bands has caught the Bitcoin tops and bottoms every market cycle. The fact that the lower bounds of the undervalued region of the regression bands is already at $16,000 and these bands move up every week means that Bitcoin is not going to 10K. Let me repeat that. Bitcoin is not going to 10K. Okay, so that's my analysis on Bitcoin for this week. I hope you guys enjoyed the video, and I'll see you guys in the next one. Take care.